Good morning, good afternoon, good evening, everyone. Please drop one in the chat if you can hear my voice. Please, your name in the chat box and where you are joining from. Okay, I can see Ignatius from Sesuita. Okay. From Nigeria, Rwanda, Ghana. Okay, welcome on the call. Okay, so I'm Prince. So today, let me say today is our second day that we are meeting, and then today we are starting the Forex class from the basic. I'm going to teach you everything about Forex, and everything is going for free. So if you have any friend now that you can call, or any friend that is in need of this knowledge, just hit on them now and tell them we are live, because this knowledge is going out for free. I'm going to teach you everything about Forex for free. So today is our first day. We're going to learn everything. I'm from Ghana. Okay, so today we're going to look at the introduction of Forex and then down to where the Lord will take us. So, talking about the Forex market, before you trade the market, or let me say before you make money out from the market, first you need knowledge. Without the knowledge, you can't make money. So we need to grab this knowledge. Let's pay attention and grab this knowledge before the money. I repeat myself, let's pay attention and grab this knowledge before thinking about money. Knowledge before money. If you don't have the knowledge, you lose a whole lot of money. You lose a lot. So first, you need knowledge first. So please take your pen, your books and everything, and then let me keep the fire rolling. So please, if you have any question, you can let me know. If you have any question, you can drop in the chat box that I have question, or raise up your hand, or anything that will let me know that you have question. I'm sure you are here with your pen and paper. If you are here with your pen and paper, just drop 5. I want to take off. If you are here with your pen and paper, just drop 5. No time to waste. Okay, so let's go. So this is the winning team Forex Trading Academy. That's our name. And then we're going to look at the introduction to the foreign exchange market, what Forex is about. So when we talk about Forex, it's just an exchange of currency. Let's say, for example, you are traveling from, let's say, UK to USA. So you need to change your pound, which is a GBP, to the US dollar. So in doing that, you have to go to the Forex Bureau, and then you change whatever money you have to the US dollar. With the reason being that if you get there, you'll be able to spend your money without any issues. Okay, so that's the same thing that goes on here in Forex, but that one we do it digitally, like on the internet. There is no Forex Bureau involved that you go and meet people at the roadside, or no. We do this one digitally. So that is all about Forex. So let's read all this here. Forex stands for foreign exchange. Forex market is the richest financial market in the world, with less than 3% of the world's population earning from this lucrative market. All we do here is to buy or sell currency. That is all. All we do here is to buy and then sell currencies. And then over $6.5 trillion is traded daily on this market. Okay, so as we all know, Forex is one of the part of the financial market. In the financial market, we have Forex, we have cryptos, we have derivatives, we have stocks and all those things. But in all this market, it is only Forex that have entered trillion, and that is over 6.5 trillion always available in the market. So at any time you can jump into the market and make money. You making money from this market will never affect me. Okay, so let's continue. So participants in the Forex market. Okay, so in the Forex market we have so many people that play part in the market, but we are going to look at only some of them. We have the major ones. We have the central banks, which are the big banks. They also participate in the Forex market. Their aim is not to make profit. Their aim is to just balance the economy, that this economy will not be running higher than this one's currency. So they are just there to make things stable. They are not there for profit reasons. Example of such bank is we have JP Morgan, banks like that. They are there to regulate the system. And then number two, we have the commercial banks. Commercial banks are the minor banks that we all know. The ones we have in town that we go there to do our investment and deposit and all those stuff. They are also participating in the Forex market to make profit. If you put your money in the bank, what they do is they take your money and then they put it in the Forex market. They make money there and then they give you something small, just a peanut. So it's good you know this skill and then you won't put your money in the bank again. It's good you know, because if you take your money to the bank, they will take it to the Forex market. So it's good you know how to operate with the Forex market so that you will not be putting your money in the bank for them to be giving you peanuts. Okay, hope I'm clear. Okay, so the third one, we have the retail traders. So we are part of the retail traders. We are in this market 24 hours to just make money. We are here for profit. We are just here for profit. That's the reason why we are in this market. Day in, day out, we are here for profit. So we are the retail traders that are trading this market. Okay, so let's move to the next one. What is traded in the Forex market? Okay, so this is not a form of market where you buy your clothes or shoes. The foreign exchange into private Forex or currency market is a global, decentralized or over-the-counter market where currencies are traded. As I said earlier on, this is the market that we trade currencies. That is for Forex. If you go to stocks, we deal in stocks. If you go to commodities, we deal in commodities. But for Forex, we deal in currencies. Okay, so it includes all aspects of buying, selling and exchanging currencies at current or determined prices. In the Forex market, they give you a price at which you sell and then a price at which you buy. So we have like time that this price changes. So we deal in only currencies here. So let's continue moving. So advantages of the Forex market: you have high liquidity, you have low barrier to entry. I'll explain all the points. We have better risk management, and then we have time freedom. Okay, so with high liquidity, there is much movement in this market. At any day, any time, there is that high liquidity in the market that is flowing, that is making people to make their profit day in, day out, and then no barrier to entry. Okay, so when you want to join Forex trading, the only thing you need is to just connect with your broker. I will explain broker later on. You connect with your broker, you verify with your identification card, the one you have, like your country's own. You verify it, so there is no difficult barrier into entering into the market. Better risk management. Okay, when we come there in Forex, you can determine what to lose. Let's say, for example, you are trading $100 account. You can choose to risk $5 of that money. It doesn't mean that when you come into the market and then you deposit $100, everything is going to go. No, you won't lose everything. You can choose yourself what to risk put like in the trade as a risk. You can choose that, you can determine that. And then time freedom. At any time you can choose to enter this market and make money. It's not like your 9 to 5 job that is a must for you to be there 9 and then report there and then sign things that I'm here 9 and then I'm closing 5. No, you have that time freedom to move at any space and at any time and to enter the market and then make out your profit. Please, if you have any question, you can let me know. Is there any question? Okay, so we are going to look at the trading times and then sections. So in Forex, we have some times that there are high liquidity in the market, and then we have some sections that those liquidity tends to move with speed, like there is high volatility in the market. So we are going to look, so it's not that like it's at any time that you can jump into the market. I see some people that at any time, any day, they are in the market 24/7, they want to catch something. No, at the end of the day, you grow your account. You just have to monitor and then know the sections well. So we are going to look at the trading times and then sections. We have typically 3 sections. We have the Asian section, we have the London section, and then we have the New York section. So please, if you are taking notes, please be fast. We have the Asian section, we have the New York section, and then we have the London section. All these sections have their time that they play out. So we are going to look at all those times that they are active. Okay, so Forex is actually a 24 hours market. It is most time regarded as the market that never sleeps because it's open for 24 hours of the day except on weekends. So no matter where you are around the world, no matter your time zone, you can actually trade this large, highly liquid market. So no matter where you are in the world, you can trade this market. Okay, so trading section, opening and closing time. Okay, so we have the Asian section, which I said earlier on. We have the London section, and then we have the New York. So the Asian section, it opens 11 p.m. to 8 a.m. That is GMT 00. So the London sections opens 7 a.m. to 4 p.m. also GMT 00. And the New York sections opens 1 p.m. to 10 p.m. GMT. Please, if you are taking notes, be fast. Okay, so you can translate this time to your local time zone. All you need to do is to just go to Google and type Forex trading section hours. Okay, by this opening and closing times sometimes changes during the summer season, that is April to October. They increase by +1 GMT. Okay, so we are going to look at best sections to trade Forex. So all these sections, we have some of them that are favorable, that when you go or you move with them, there is a high chance that you can make more from those sections. So we are going to look at those best sections to trade Forex. Please, there is a mistake in the typing, you can correct it, the section. Okay, so the most volatile sections are the London and the New York section, because there is much volatility during these sections. Okay, so in the New York and then London section, the price movement, that is, the market begins to move with speed. That is where you can make a whole lot. You make money when the market is moving. During the London section and then the New York section, these are the times that the market tends to move with speed. So that helps us to make more money. I'm sure you are clear with that. Okay, so we have a note there. The overlap of the London and then the New York section can do you good to accumulate more. And this is the best time ever to trade. Okay, so there is a place that the London section and then the New York section join together. So when you monitor those times and then you come into the market, volatility tends to play out high. Why? Because the London and then the New York section are meeting together there. So let me continue. Best days to trade Forex. Okay, so we have days that are favorable to trade Forex for us to be profitable. So let's look at these days. These days we have Tuesdays, we have Wednesdays, and then we have Thursdays. Why? Let's take Mondays. Okay, the Forex market is open 5 days in a week. That is from Monday to Friday. So on Saturdays and then Sundays is closed. That is the Forex market. Okay, so for Mondays, that is where the market is open. So there is not much volatility or price movement in the market. We make profit from the price movement. When there is much price movement in the market, that is where we make profit. So on Mondays, the market is just opening. So you see there is that door type of movement in the market. So scarcely, it is only scarcely that the market tends to move with high volatility on Mondays. So we don't advise you trade on Mondays here. So that is why Monday is not part. And then Fridays too, that is where the market is going to close. And then price tends to play out in some funny ways. So we advise that Fridays are also not good for trading. But there are some people they trade like every day, Mondays to Fridays. That is when you are good and then familiar with how to move with all those days. Yeah, you can train yourself or master the market to know how to adjust your trading strategy during those days. Okay, so let's continue. Okay, so we look at Forex Broker. Okay, so let me explain before we jump here. So in Forex, those days we are not allowed to trade Forex. Why? The reason is that the money that is involved is big. Like we can't afford that kind of money. So it is only banks and all those big firms that trade Forex. But now we have brokers. Brokers serve as a link between you and the big market. So they link you to the big market. Without the brokers, you can never trade Forex. So they serve as a link, and then they help us to be able to trade the market. They help us in some ways. Some of the ways are like we call something leverage. They give us leverage to be able to trade the financial market. Say for example, you have only $100. You can't trade with $100 in the market. That is it. You can't trade with $100 in the market. But the presence of Forex brokers, they've made everything very simple that with that $100, they will borrow you money. We'll come and learn about that. With that $100, they will help you to be able to join the big people and then trade with them. Yes, so we are going to look at them. They are the Forex brokers. Okay, so let me continue. So who is a Forex broker? Forex brokers are firms that give you access to the Forex market, as I said earlier on. Okay, so they are like middlemen between traders and the interbank, which is a global market that allows you to trade foreign currencies. Okay, so as I said earlier on, they are like middlemen. Without them, you cannot trade the Forex market. That is why we need good brokers. So they link you to the market. Okay, so examples of such brokers are, we have XNES, that one is common. So many people know of XNES. And then personally, I use FBS. I have my own reasons, and then I'll tell you. I use FBS, and then we have our market, and then etc. So personally, I use FBS. The reason is this business is all about money. Any mistake you make, either from you or from your broker, you lose money. So you need a very good broker that can help you at all time. We call something slippage. Some of the brokers, they don't have that kind of big slippage when it comes to like when there is a news release in the market. I will explain. When we are moving, we begin to understand all these things. So they help you to connect to the market, and then you need a good broker to give you good service. Brokers, we call something spread. Some of them, their spreads are big. So personally, me going to brokers and then checking them up and down, I'm using FBS for now. I will drop my link so that you can register with them. FBS, that is what I'm using for now. I will drop my link in the group so that you can register with them. Okay, so how to select a forex broker? As I said earlier on, without these people, you can't do anything. If you are not having a good broker, things can mess up. Any mistake in forex is money. Like you are going to lose money. You are going to lose money. So you need to look at the broker law and then check some things to be in place before going with them. So how to select a forex broker? So the first one, we have regulations. We have so many regulatory boards that regulate brokers, that see whether they are providing the right service to their customers. So you need to look out for all those things, like check their regulation and then see the board that is regulating them before going with them. And then execution. Execution means, let's say you want to enter into a trade. You are placing either a buy or a sell. When you place it here, or let's say that, when it goes down, the execution, some of the brokers, they will delay you for 3 seconds before executing your position. And then the market will never wait for you. The market is forever moving. So that 3 seconds can cost you a lot. You get me? That 3 seconds can cost you a lot. So you need a broker that can give you, as you click tap, it will go tap. If you go peer, it will go peer. No, a broker that you go tap, it will relax 1, 2, 3 tap. No, not that one. So you have to check their execution. So when it comes to customer service, you have to know how they respond to issues. As in, like when you get to them with a problem, you have to know how they reply you and all those stuff. You know whether their customer service is fast and all those stuff. Okay, ease of withdrawals. Okay, so every broker, per my experience, every broker, they have ease of deposit. They will allow you to deposit well, like you deposit your money well, like with ease. But when it comes to withdrawal, that is where some of them begin to do some funny things with you. You see that? So you have to check their ease of withdrawals. You have to see their minimum withdrawal. Some of them, they allow as low as $5, $10. So you have to check their minimum withdrawals before you go with them. Okay, so please can you re-explain the ease of withdrawals? Okay. Thanks for that, brother. Let me answer that question. Let me go back and then answer the ease of withdrawals. Can you explain the ease of withdrawals? Okay, so the ease of withdrawals, talking about ease of withdrawal, I said every broker, from my experience so far and then checking brokers, every broker will allow you to deposit with ease. Like when we means ease, like no problem, like they can allow you to deposit. Like the deposit method is very easy, very smooth. You can enter, deposit, smooth, easy. But when it comes to withdrawals, that is where they'll be giving you options. Some of them, you have to verify your account before you withdraw. And then that one, I will advise each and every one of us to do that before even depositing. So the ease of withdrawals means you have to check whether if I put my money here and I want to take it back, there will not be any issues. You need to check whether everything with the broker is smooth before going with them. If I'm clear, let me know, brother. Is it brother? Yeah. Okay. Okay, he said I should proceed. Okay, so let's continue. Okay, so when you come to Forex, you'll be hearing people saying certain things. You'll be calling certain names, like, let me say, Forex jargons. When you are calling this name, then they know you are in the game. Like, so we are going to look at all this. We call them terminologies in Forex. So we are going to look at all these terms, and then we see when to use them, how to use them. So the first one is long. So whenever you are trading Forex, or you are a Forex trader, or you see anybody saying long, you are going to long this. Meaning the person is trying to tell you, I'm going to buy this, like you are going to long GBP USD, meaning you are going to buy GBP USD. If they put GBP USD is long, meaning GBP USD is buying. You get me? Okay, so the opposite of long is short. So please take note of all these terms, like you'll be using them back to back. So please take note of all these terms. Okay, so the second term is short. Okay, so anytime you're in the Forex market, and then I'm telling you that, okay, we are going to short this thing, meaning we are going to sell. Short means sell. Short means sell. So short, sell. Okay, so let's proceed. So bullish. So if we say something is bullish, meaning it's going up, upwards movement. So let's say the market is bullish, meaning the market is going up. It is in an upwards movement, like it's moving up. That is bullish. Okay, so when we talk about bearish, that is the opposite of bullish. So when it's not bullish, then it's bearish. So when the market is bearish, meaning it is going down. Bearish, going down. Bearish, going down. Bullish, going up. Okay, we have the bears, and then we have the bulls. You hear a lot of people saying bears and then bulls, bears and then bulls. Okay, talking about the bulls, and then so many Forex logos you see bears and then bulls there. So bulls refers to the buyers, like the buyers, the bulls. They are the people ready to buy. Forex is all about a fight between buyers and then sellers. If the bulls are having power over the bears, meaning the buyers are taking over. But if the bears are having power or control over the bulls, meaning the sellers are taking over. Okay, so let me repeat that again. If the bulls are taking over, meaning the buyers are taking over. If the bears are taking over, meaning the sellers are taking over. So sometimes you hear people say the bulls are in the market, meaning the buyers are in the market. The bears are in the market, meaning the sellers are in the market. Okay. The next one is we have ranging. Okay, so when we talk about ranging, when you say something is ranging, meaning there is no clear movement. It's neither going up nor coming down. It is just within two, like moving within just two regions, or like say one straight line, just stuck at a particular place. So that is ranging, means no direction. That is ranging. So please take note of that, ranging. So if you say the market is ranging, another name for ranging is consolidating. You can put that in your notes. Please add that to your note. You can add consolidating to your note. That is another name for ranging. And then in economics, another name for that consolidating and ranging is equilibrium. If you have ever studied economics, you've come across something like equilibrium price, equilibrium. So you can do into brackets equilibrium. That is economics terms. Okay. The next one is trending. So if you say something is trending, meaning the thing is moving in a particular direction. It's either up or down. So it's either trending up or trending down. So if you say the market is trending, meaning you're trying to say the market is moving up or coming down, that is trending. So please kindly take notes of these terms well. So when we talk about trending, meaning the market is moving up, coming down, moving up or coming down. Okay, so when we talk about leverage is like a money that your broker, we talk about broker, so they borrow you money. The reason is you can't trade the forex market with the money you have. So when you deposit your $10, your $20, the brokers will borrow you money. That is the leverage that they will give you. So that is how much large you can trade relative to your account size. So there are calculations about leverage that we are going to look at. We're going to look at how to calculate the leverage, and you know this leverage is that, this leverage is this here. So that's about leverage. PIP. Okay, so we talk about PIP. That is point in percentage. PIP is just like price movement. The price is moving, we call it PIP. In economics, we call it price. But when it comes to the technical aspect of forex, for everything in forex, know that in mind. All those analysis and everything is pure economics. It's just, they are just representing the things. So in economics we call it price movement, but in forex we call it PIP movement. Okay, so let me repeat the PIP again. In technical aspect of forex we call it PIPs, but in economics we call it price. So that is price movement. So there are so many ways, like we're going to learn how to calculate how the pips movement, when it's 1 pip, 2 pip, 3 pip. We're going to learn all those stuff. Yeah. And then bid, we have bid, and then we have ask. Okay. So a bid is a price at which you sell. Let's say example, the thing will just be when the market is going up, the broker will give you a certain price. Like you'll be seeing 2 lines. We are going to learn all those things. I'll project my screen so that you see. I'll project my phone so that you see the bid and then the ask price. The line is moving. So the bid price is the price that the broker will give you that sell at this point. So that is bid in forex trading. Bid, what bid means in forex trading? It means the price at which you sell. That is the price that the broker is willing to give you for you to sell. So the ask price is the price at which you buy. That is the price the broker is offering you to buy. I'm taking my time to explain these terms so that you get everything clear. Ask price is the price at which the broker is giving you to buy. The broker is giving you that price to buy. So that is where you buy. When you place buy, that is where your price will land. Okay, so let's go to lots. Okay, so here it refers to how much of a forex currency per you can buy. Okay, so let me come to a layman's understanding. When it comes to lot is just like the money you are putting in. That $1, $2, $3 you are putting on the trade. That is what we call the lot size. In your local currencies, Nigeria, we have naira. That 100 naira, 10 naira that you are putting on the trade, that is what we call lot size. Ghana, that 10 cedis, 20 cedis that you are putting on the trade, that is what we call lot size. I'm sure it is clear. So lot size should not confuse you. Lot size is the amount you are putting on a trade. Okay, so the next term is stop loss. So talking about stop loss, so it's just an order that you are giving your broker that should this thing go against me, even if I'm not active in the market, just close me with this loss. Just close me with this loss. That is what we call stop loss. Like stop my losses. Stop my losses. That is stop loss. So stop loss is an order that you are giving your broker. Let's say you have $100 and then you are trading and then you want to risk only $5. You can tell your broker, there is a way you go about it. You tell your broker that I want to lose only $5. Even if my phone is off, I'm not in the market, I'm off somewhere. You, if it reach $5, just take me out of the market. Let me lose only $5, meaning I'm wrong on that trade. So let me lose only $5. Okay. So the opposite of stop loss is take profit. Okay, so when it comes to take profit, you are telling the broker that you take me out with this profit. Let's say you have $100 account and then you are aiming per your risk to reward, you are aiming to make, let's say, $20 on that $100. You set that point that okay, if my trade reach this position, broker, please take me out. I want to go out with this profit. Yeah, so whether you are online, you are not online, you can set it and then you go out with that profit. When the profit reach that place, the broker will take you out and then you just come and see profit. Okay, so if there is no question again, then we end it here. Okay, then bye bye everyone.
Thank you so much.